Good afternoon, everybody. Welcome to your Trader Merlin Show for your trading week wrap up. A little bit of a different trajectory. Normally, I love doing Fridays solo, and I've got my nice little glass of Colonel Taylor's whiskey here today to cheers everyone as we progress through the weekend. But every now and again, I get a guest on that can only make certain days. And this one was a guest I've been wanting to have on for quite some time because I met this, I don't know how long ago I met Craig. It's got to be 10 plus years through Trading Academy and the whole kind of, somewhere around there. And it's always been one of those guys that I love straight shooters. I like people who have a very clear, concise plan, approach towards the markets. And I love people who have longevity in the markets as opposed to somebody who just started 3 weeks ago and says they're making 85% rate of return, which I see too often. And also a wealth of experiences and thoughts on market who's been through bullish and bearish markets. I'm speaking of none other than Craig Weil, who is a former CME floor trader. We're going to talk about his market outlook and just, I guess, life and trading and everything in between. So welcome to the program, Craig. How you doing?
I'm great, Merlin. I'm so happy to be back with you after all these years. And as a matter of fact, I can put a number on that. 2008 we met.
2008,
So,
huh?
yeah, yeah.
18 years I've known you?
Were you even born then?
I didn't even have gray hair back then.
I don't have gray hair now, so I got you there.
Well,
I don't know why.
it's been a privilege and an honor meeting, and every time we get together, it's unfortunate. I miss the events, the corporate events we used to have, the big ones, and hopefully we'll get back to those days where we can all meet and just have a fun and hang out as a crew, which I really enjoyed. Tell me what's going on in your world. What's new with you?
Well, I have a new knee.
Okay.
So I wrecked mine about a year ago, and I've been limping around for about 6 months. So after it was finally decided that I needed a knee replacement, one of the things I discovered was that you can't get on a plane for 6 weeks after you have the replacement because of blood clotting or whatever.
Oh, wow.
And I had several classes scheduled and a personal trip, so I couldn't find 6 weeks free for the last 5 months. So finally, 2 weeks ago, I got it done, and I'm like a new man. I'm learning how to walk again. I'm gonna go back to playing pickleball and all those fun things that people my age do. So that's the newest thing in my life. The most recent thing is that the good news is I haven't been outside my house in 2 weeks.
Nor can you probably
And
get outside. I mean, I saw in the chat here, someone says it's Ice-mageddon. Yeah.
it's minus 5 degrees out. It's beautifully sunny, but
I just
it's just
recently
awful.
bought, just so I can commiserate with you. I recently bought a coffin cooler for my garage, a freezer. And in there, it is about 5 below. So, but it's
Okay.
sealed, it's closed.
Stick your head in there and see how.
I'm good. I definitely do not want to go in that. All right. Well, I hope you survive the storms that are coming through there, and your natural gas prices, which are going to be skyrocketing.
Well, yeah, absolutely. I'm actually short a natural gas spread right now, which is not doesn't feel too good, but I'm not too worried.
As we progress, I want to get through the kind of the broad market stuff first, and then we'll talk about spread trading because I know you have a class,
Sure.
a focus class you teach at Trading Academy. As we entered into 2026, there's the old mantra, which I'm sure you know all the market mantras, and there's a reason we have these market mantras, and that says, as goes January, so goes the rest of the year. And right now we're slightly up for the year, and just wanted to get your take on what you see happening in the broader market, and because I know you well enough, maybe you want to explain a little bit about your style and why this might be relevant or not relevant.
Well, my style, as you may recall, is pretty much an intraday style, except for the types of trades I do that have to do with seasonality in the marketplace, in agricultural products and energy products. And there's a lot of seasonality in the stock market. And when you say so goes January, that's an example of one of them. And so it tends to be kind of a moment during the calendar year where new money is moved into the markets. And generally speaking, January is usually positive. And when it is not, that's kind of a warning sign for the year. Now, there's also, other things that go into seasonality in the equity markets, and one of them is we're in a midterm election year, and that happens to have been not such a great thing for the markets. For whatever reason, people start to get nervous about a new, Congress coming in and maybe some changes in tax laws and all of those things. And so, uh, for the most part, the midterm elections and leading the year or the 12 months before the midterm elections tend to be kind of a sideways market. So that would be what I would be leaning toward, simply because in the back of my mind, and because I'm a student of all of that, uh, would be more or less kind of what I see going forward. I will say this, that and so there's all kinds of things going on politically, as everybody knows, and there aren't too many people that can move the market. Jim Cramer can't. Warren Buffett can't. Maybe
For a
Warren
day or
Buffett
two.
can
For a
move.
day or two.
Yeah, can move a stock or
Sure.
whatever. But generally, we're talking about the chairman of the Federal Reserve or of the president of the United States. And to give you an example, April has historically, most people might not be aware of this, is the strongest month of the year. This year it was not, because we had, Liberation Day and all of the gyrations that went back and forth in the month of April. And so that seemed to kind of mess up some of the seasonal stuff. And I would say that, looking back upon my year, even though my year, I had a very good year, and it was essentially built around a couple of stocks that I have investments in. So more or less luck, call it what you will. But I think the year, even though it was up 20% or so in the S&P 500, was a very difficult one to trade. I know that most people that are active in the markets have been complaining, for most of the year about, the momentum traders. It wasn't a good year for them. For the scalpers, not such a great year. Except, I think that the only way to really survive the past year individually was to be taking small pieces out of the market every day,
Yeah.
because we had so many ebbs and flows and stops and starts, and ultimately a lot higher than we began the year. But when you think about where that concentration of the positive move was, it was pretty much in a handful of stocks,
Right. Right, our
right?
Magnificent
So
Seven. It's so funny because I have the S&P up here, and you're right. The beginning of the year was so rough, and I think most people expected, at least I think this audience expected, maybe it's because of my influence, that there was going to be just a lot of uncertainty because we have a new regime coming in, and let's see how the chips dust settle, if you will, and of course all the tariff talk and all that rhetoric. And you look at the behavior of the market from February to April, and it's like, oh man, this felt like the sky was falling, and here we go. Or people saying we're going to the Great Depression again, and then all of a sudden, massive tariff talk. And from April, you mentioned it was difficult to trade. I think it was difficult to trade the beginning couple of months of the year, but from April through October, you just had to buy something. You really just had to buy anything and hold it, right? Because it was just such
yeah,
an amazing
hold your
move.
nose.
Yeah, and then the choppiness that happened in the last couple months of the year, and unfortunately, the last couple months of the year kicked my butt. I mean, I was doing phenomenal because of that market rally, but I gave back some because of just, I would say, bad investments on my part. But going into this year, it was so many unknowns, and as we roll into 2026. Do those unknowns persist, right? You look at the geopolitical stuff. You look at Trump now talking about just invading Greenland or Iceland, if you can ever figure out which one it's going to be on that day or get the name right. You've got, Russia still an issue. You've got China and the BRICS. You've got Israel and Iran, which I think that thing's going to heat up here real soon. Are there as many uncertainties going into 2026 as there were in 2025 from your perspective?
From my perspective, absolutely. And sometimes I don't want. Yeah, it's just very difficult to see all of the things going on in the world and be settled about it.
Right.
It's the most unsettling thing. And it seems like the only real voice that gets to the president is the market's behavior. It seems like when he initially imposed his tariffs and he was all over the place with it, the market just, the market hates uncertainty.
Yeah.
The Wall Street needs to know and needs to rely on certain things. And businesses need to be able to invest with certainty about what's going to happen going forward. And I don't know how they can do that right now. That's why I don't see the market really running away and hiding, certainly not matching last year or even close. But again, that's just a personal opinion, and those are a dime a dozen. So
We like opinions. We like, it's funny, Craig. Is what's funny is I'm going to ask you two questions to wrap up here and put in our spreadsheet. But one of them is going to be what you think the S&P is going to be by the end of the year, and that's why I asked you at the beginning to kind of talk about your style a little bit, because I know the answer is I don't care. I don't know. Who cares, right?
right. I mean, for me, Merlin, the sum of the parts has always been greater than the whole. I learned a long, long time ago that trying to pull money out of the market every day was easier than trying to predict the long-term movement of anything. And so I became an intraday scalper, and I still am for the most part. I don't carry positions from one day to the next, except for some spreading and seasonal things that I do. So I'm just for the here and now, and I leave all the other prognosticators out there to give it a shot. Good luck, but I've never been a good guest, or would have been a good guest on any kind of business show that would ask me what I thought, and I know you're going to do it at the end of this show. But for anybody listening, it's going to be my best guess, and that's about it.
Well,
So
let me ask you a question. This is interesting because statistically, you look at the books, short-term traders in general don't succeed. And I think it has to do with lack of discipline. I think it has to do with lack of applying a specific set of rules, having poor risk management. And most would look back at the greatest market professionals and say that they were longer term because markets are built to go up. You time the markets like a Buffett and so many other great names out there. Would you say, because it sounds you are pretty adamant that like short-term trading is where it's at, but I would argue that's probably a product of your training and upbringing, right? Like you went straight into the CME, right?
Yeah, I went. Well, I started at the Chicago Board Options Exchange, and that was basically equities. And so, but I think one of the things that really dictated my style when it was all said and done, and my willingness to invest, was I lived through the crash of 1987. And that was, I was on the trading floor that day, Black Monday, and that was a day when the market dropped 20%. I mean, that would be the equivalent of the market going down over 7,000 Dow points. Today, you can imagine what a moment that was. And I actually thought that it was the end of my career, even though I was in my upper 30s at the time, and I'd been doing quite well since I became a member of the CBOE. I really thought that I was going to have to look for another job because that's the kind of impact it had on me.
Yeah.
And as a result, and I'm not proud about this at all, is that I was so changed by that moment, both personally and professionally. Personally for the better, but professionally not so much, in the sense that I was reluctant to invest in stocks. I had all of my eggs in the basket, so to speak, as a member of the CBOE. And the memberships there, the value of those memberships would go up and down with the fortunes of the stock market. Right. And so the only equity I had was in a seat. And so it kind of prevented me from investing long term. And I think that even though I saved a lot of money, and that was a good thing because my wife Sherry and I were savers, we're not spenders, but I could have done so much better if I was less reluctant to invest in the long term. So I, when I look back, if you asked me, do I have any regrets? I really don't have any regrets, but that's one thing I could point to and say, wow, I should have just been putting money in the market all of those years,
Sure.
and
But
I'd be
hindsight's
a lot
2020.
better off. Well,
Hindsight's
of
a
course, and as a trader, you don't have the luxury of being able to look back. So, um, but that's kind of where I'm at, or how I became an intraday trader. When I saw so many people around me on Black Monday go out of business because they were short worthless puts, or what they thought were worthless puts, it just led me to believe, well, I'm not gonna, I'm just gonna be flat virtually every day, and
right.
take it as it comes. And so that's what really shaped me.
Yeah, I would
The other,
imagine so. I mean, that
yeah,
I don't think anybody here can relate to that moment. I could have a. I mean, I've had 20% down days for crypto. That's just I called Thursday. But with crypto, that's a totally different ballgame. I'm behind a screen, and I can't
yeah.
imagine being on the C. Was it you were on the CME or CBOE when on Black Monday?
CBOE at that time.
If you wouldn't mind, if this is PTSD, I don't want to ask you to do it, but like
That's okay. I'm
for our
good.
audience out there, describe that day because I imagine it started off as just another normal day, right? And then would
Yep.
imagine there was this cascade of
Well,
emotions and
it
screaming
was,
and
well, to be honest with you, it was silence. And so here's kind of what was leading up to it. Now, back in, and this is the late 80s, if the Dow moved 30 points in a day, it was a rather large move. And on the Friday before Black Monday, we had 100-point swings in the Dow. And like I had never seen before up until that point. And it was pretty frightening. Well, I was trading large volumes of options and puts and calls, and uh, um, you know, uh, penny options would go up to $2 and back to a penny in a matter of minutes on Black Friday. It was, I mean, on the Friday before Black Monday. And so coming into Monday, there was all of this weirdness that happened the Friday before. But the moment that the market opened on Monday, and there was no extended hours or anything like that, and immediately the Dow had dropped several hundred points right off the opening, and it was like silence on the trading floor.
yeah, I
And
imagine.
people were stunned, and certainly the people that were short puts were internally freaking out. What happened to me that day, and I can remember like it was yesterday because it was just a watershed moment in my life, was that I'm looking around and I'm thinking, oh my God, all of these guys, and I'm trading in the OEX pit, which was the options on the S&P 500, and I'm thinking, oh my God, there are so many of these guys that are going to go
It's gone.
bankrupt,
Yeah.
and um, I had my trading account, and when you have a broker or you're a floor trader in those days, and still even today, you had what was called there were firms where you had your trading account with. There were pretty much featured with mostly floor traders, not public money. And so I'm thinking that the company that I cleared my clearing broker through was going to go bankrupt. And so after about 30 minutes, 40 minutes, seeing what was going on there, I'm thinking, oh my God. And at the time, I had several $100,000 in my trading account. And I'm thinking, oh my God, I'm going to,
It's gone.
my clearing broker's going to go out of business. This is the end of the world for me. So I walked off the trading floor. I went upstairs, and I know that back in those days, I think you could a CD I think you could only get a CD up to $100,000 or something, and that would be guaranteed by SIPC. And
Hmm.
so I went upstairs. I got three checks from my clearing broker, and I walked outside. It was a gorgeous October day, and the sun's shining, and I'm thinking it's the end of the world. And those were the days where if you wanted to make a deposit or withdraw anything, you actually had to go to a bank. And so I walked outside the CBOE, and in Chicago, you can have a gorgeous day in the fall, and it was 60 degrees out, beautifully sunny. I walk outside the doors of the CBOE. I see people laughing, enjoying their life. You
Not knowing
know,
the chaos behind those doors.
well, and so, but that's so I'm thinking, I walk out there and people are having lunch and they're sitting on benches and this and that. And I got about a six block walk to my bank. And I'm thinking, don't you know? Don't you know what's happening?
Yeah.
It's the end of the world. And so, and as I kept walking towards my bank and people I walk by, don't you know? Don't you know? I'm saying to myself, I get inside the bank and have to go upstairs to find the individual that I dealt with on a regular basis. I'm walking upstairs. People are doing their jobs, everything, nothing's unusual as far as what was going on inside the bank. And I'm thinking, don't they know? Don't they know what's going on? I go up and I see my banker, and he's surprised to see me. And he said, Craig, what are you doing here? And then I said, don't you know? And that's when it struck me, Merlin. When I said that it changed me personally, it struck me that, and then I had this thought. I said, you little, I'm talking to myself now, you little shit. You are so insignificant in this world. When you were on the trading floor back in those days, especially in the city of Chicago, everybody wanted to be a trader. I was 38 years old. I made a really nice living, and you get kind of jaded. I don't know what the proper word would be, but to think that you're in the center of the universe, so to speak, and that everything revolves around the stock market and money and this and that. And I did. I said to myself, you are doing nothing for anybody except personally for your family. I said, you're not curing cancer. You're not contributing to society in any way. You suck. I actually said that
You're a
to
little harsh
myself.
on yourself there, bud.
Well, I was, and you know what? It changed me. It changed me to this day. From that point in time, I never took anything I did regarding work serious. I, spent much more time with my family. I took a lot more time off of work. It changed me as an individual, and it just was a moment in my life that I'll never forget.
Yeah.
And so that's what I did on Black Monday. And so I went and parked my money until the
Smart.
coast was clear.
Buy low.
Well,
Yeah.
it turned out to be that that year, 1987, was the best one I ever had on the
I
trading floor
bet.
because, well, what happened was the markets between the bid and the ask, the spreads between the bid and the ask for these options became so
Yeah.
wide that it was just a terrific edge in
Essentially,
being
risk
on the
premium.
floor.
When those spreads get so wide like that,
Oh
that's
my
an
God,
indication of risk. Yeah.
the volatility,
Yeah.
the the fluff in
Yeah.
those options were enormous. And but then after that, that was the best year I ever had to this day. And then probably one of the worst years I ever had was following that because what happened was the at that time the options market wasn't the kind of market we have today, where it's a math game and we've got all these different products and the directional and non-directional and all kinds of strategies built around it. That hadn't creeped in to the day-to-day trading. And so people were using options, cheap call options, as like gambling back in the day. And the retail investor loved options because you could, buy some very cheap vehicles and hit jackpots if you got it right. And so the crash of 87 drove out all of or a lot of the retail not traders but speculators.
Sure.
And so the order flow dried up, and I found myself for the next year and a half just kind of sitting around trying to scalp stocks.
Yeah.
There was no options trading, and
The
that led me to the CME.
Yeah, that volume, well, not the volume, but looking at the price chart, I'm all the way back to 1987 here. Going into that Friday, into that Monday, you'd fallen 15% over like the last 9 trading sessions. And it was just building up momentum. Each candle got bigger and bigger and bigger, and volume was surging.
Right.
There was definitely warning signs there. But to have a gap down that morning of 9% to continue to fall, I mapped out here so the viewers could see it. That happened on October 16th, is that big drop there. But
It was Friday.
Yeah, it took till Monday, January 23rd of 1989 to recoup that gap. To close the gap from that Friday to that Monday, it took 320 trading days. I mean, that's a year and a half. That's crazy.
Well, it is, but if you ask me, so from Black Monday, I never thought it would recover like that. I mean, that was to me, that's pretty quick. It only took 2 years to fill that gap or to rally that amount to come back to where it was. And there was no real, to this day, I think there was no real fundamental reason for it. I mean, the bonds had been selling off for weeks and months, but there was no apparent reason that anybody could put their finger on. And speaking of that, they started to blame the stock index futures. That was before they had E-mini S&P 500s, and the contract was 5 times the size. So a point in that contract was like $250 worth of risk. And so it was only institutional investors that even utilized that product. And so they started to blame that move on the stock index futures. And
it's always something.
Congress, Congress doesn't understand the market, or most people in Congress doesn't understand it, other than, at that moment in time, they felt that it was speculative activity and that they had to put reins on it. So they implemented circuit breakers. To this day, they're still in place. And interestingly enough, the third level of circuits breaker is a 20% drop.
Yep.
In the S&P 500. That all came from back then. But so it was crazy, and hope I don't ever experience that again. But it's not like it's impossible.
No.
So
You hope you don't experience that again. Man, maybe I'm just a glutton for punishment. I'll be honest. I am looking forward to it.
Well, but you couldn't, Merlin. You couldn't take. Now you tell me, right now, today, if the Dow went down 20% on Monday, would you be able to capitalize on it? There was no trading that day.
I would. I would.
Okay.
First off, if it gaps down 20% on Monday, the question would be, in hindsight, you'd be like, oh, I'm just going to jump right in and buy it because it's down 20. I don't know if it necessarily would be doing that. But I keep a lot of my powder dry, right? For example, going into this weekend, I am actually very much of the opinion that we're going to see a major conflict escalation within the next 2 weeks in the Middle East.
Okay.
I'm looking at defense stocks. I'm looking at the talk track from the president. I'm looking at just the different things that are going on. I actually opened up a direction. I bought puts today on the S&P 500. Funny enough, my strike price, 666. I couldn't resist buying the 666 puts just because it was so demonic.
They even have a strike at 666?
They do. I currently am long a bunch of them at this moment. But, I'm not allocating all my capital.
You're not talking about 6,666, are you?
No, I'm on SPY.
Okay.
Yeah. No, yeah, I'm not. Yeah, I'm not on the full futures. No.
Okay.
Just on. I did options on SPY today. So yeah, I'm. I will position myself, but I'll never do it with 100% of my capital because I know that black swan is right around the corner, and the longer this market keeps on rallying up, my gut tells me more and more we're going to have that kind of moment, and it's fine. But for the most part, I'm going to allocate my positions long. As the viewers here know, I currently have long positions. Well, they're expired worthless today on Tesla and on Amazon. But yeah, if the market dropped 20%, I absolutely would have some buy power to throw out that market. Now the question is, when that happens, if we drop 20%, that shouldn't automatically indicate a buy, for me. There's other factors I need to look at, like is this the beginning of a much bigger down move, which could happen as well.
What's interesting is that, so I have a very good friend who was also a trader at the CBOE, and because the market fell on Friday afternoon and closed down 100 points, his instincts, well, it's got to bounce on Monday.
Yeah, right.
And he went home long 10 S&P 500 contracts, and I'm not talking about minis.
The full.
So the full.
The SPOOs.
Institution. Yep, you got it. And so immediately he was out over $1 million
Oh my goodness.
on Monday morning, and he went out of business.
Yeah.
It ruined his life basically. He moved his family. He couldn't take being in Chicago anymore with a lot of successful traders that had survived all of that and continued on in business. He moved back out west, and to this day, he's never kind of mentally recovered from that.
Yeah.
And so you can say, again, you can see everything in hindsight,
Sure.
what you would have done or should have done. And I don't disagree with you that we may not have a black swan event, but I would think that it would mostly be geared to, a debt issue. And
Yeah, and that's pretty bad too.
well, more than bad. It's basically not bankrupt as a country, but there are a lot of states that are close to bankruptcy, and so that's where I think the trouble lies. But I mean, timing's everything. How can you even for you to make the prediction in the Middle East? Nobody's going to say that's stupid or dumb or not going to happen, but it may well happen. But 2 weeks, 4 weeks, 2 years,
Right. Exactly. Which is why, when I'm buying directional, I know the risk to me from the premium perspective, right? It's
Right.
So I'm okay with that. I wouldn't be selling puts on this one just because I don't want to be catching that falling knife, and who knows what's going to happen. But buying directional, it's like, okay, I know I'm okay to risk X amount of dollars,
right.
and it is a flyer, right? And I can see in the chat people are like, oh, Merlin's nuts, he's crazy, and yeah, fine.
Is that right? Because I can't see your chat.
It's funny. I had a guest on in 2020, and we did a really interesting show. It's still one of my favorites, and it was all about how to protect yourself from a black swan. And he was like, look, if you think there's something amiss and something's coming that is just a little bit too big for comprehension, then you just buy deep out of the money, but like so out of the money that the options are real cheap, and you buy a bunch of them. And that was like in February, and I bought a whole bunch of deep out of the money S&P puts. And all of a sudden, March happened, and we had that huge, and in hindsight, it was one of my best years ever, obviously, because I made a boatload off of those put positions. But, I knew going in, buying all these puts at this price, okay, the odds are pretty good it's going to expire worthless, but I'm okay to take that chance with this amount of capital. And, I've lost some pretty significant numbers doing that in the past before. This one I have open right now is not that big of a risk to me, but I know I feel like this market has gotten so complacent, and I'm bullish overall from the economic data perspective, from a trend perspective. I mean, the markets look fantastic. It's just when all is calm, expect storm is an old mantra that one of my mentors taught me many years ago, and it feels like there's just this nice calm and markets are great, rosy.
Well, that's when I don't know what the VIX is right now, but usually when it's depressed, that's
16.
16. What's its historical low?
Right now, the low, at least for the past year, has been, I think the low is 13.30. Okay. And we achieved that in December. So we're still hugging the lows here, and
Yeah.
that'll I think this is broken too because there was this the old mantra which you probably remember was when VIX is low, time to go, VIX is high, time to buy, and those numbers were 20 and 40, and we've been stuck below 20 for years. So I moved my line to 15 just to make it a little bit better representation. There's my chart how I modified my VIX, but what ruined it for me was. In 2000, in the financial crisis, 2009, when that VIX spiked to over 90, I just felt it wasn't working anymore, and I don't even look at it anymore.
Yeah, well, I've never been a VIX trader, but I know what it represents, and so I've always lived under the mantra, and it goes back to my days at the CBOE that options are made to be sold, and so I've been
I agree.
always reluctant to buy them, and if I do buy them, I'm always going to spread. I'm going to short something against it.
Yeah, to
So,
hedge your risk.
well, yeah, because you're paying money for basically time and not value or any kind of intrinsic value. So you've got to offset that in some way.
Talk,
And if you're right, you'll still make money.
right.
So,
Talk to me about spreads a little bit. We've
sure.
had a couple guests in the past talk about spread trading, and I'd like to get your perspective on, maybe the four W's, kind of a who, what, where, why, and when of spread trading, so we have a clear understanding of why this might be an investment choice.
Well, so I do specific types of spread trading, and then they happen to be based on seasonality in the markets. And so there's a firm, and I can, if you want me to share my screen or something, I can take you to it. I'm sure you're aware of it.
Anytime
More
you're
re
welcome to share your screen anytime you want.
more research. And so hang on one second.
Sure.
So I've got
And
to
while
get.
you bring that one up, just so I can explain, Craig teaches a spread trading focus course. I teach the cryptocurrency one at Trading Academy, and Craig teaches the spread trading one. So I thought I might give you a little insight as to what he's looking at and what goes on there. So as soon as you bring that bad boy up, so I've got your email there. Okay, now I got your Zoom. There's more research. All right, so I'll move it over to your screen now.
Okay. All right. So hang on one second. And I just want to, you know, tell the listeners.
And by the way, I like more research. I love their table that compares all the different futures markets from a correlation perspective. I love that one.
So what seasonality is for those listening that aren't aware of it. And it's the seasonality in the futures markets have been around for a long period of time. And they have usually have been the domain of institutional commodity houses. And there are certain things that happen at certain times of the year that will affect different months of a particular commodity. So we all probably recognize that we use more gasoline in the summer than in the winter, or we burn more heating oil in the winter than versus the summer, or that natural gas, since it's the primary fuel for our electric utilities now, the price of natural gas, and it's all real supply and demand, not supply and demand that we teach as far as technical analysis, but real supply and demand. The more stuff there is, the cheaper it's going to be. The less stuff there is, the more expensive it's going to be. Well, when we get these cold snaps in the marketplace, natural gas takes off. And when we get a lot of drought or heat waves in the summer because people are blowing their blowers, their air conditioners are on, natural gas will bounce. Otherwise, it's a very, you know, the supply of natural gas is ridiculously large overall. And so more research specializes, they and some other another company out there called Season Algo. They specialize in publishing seasonal spreads. And so they actually will, and this is a grid that shows you some of the January spreads that are recommended by them. They will give you, this happens to be what's called an intermarket spread. In other words, related instruments. This is soybean to wheat. And they actually will give you a date to where maybe to get in and maybe get out, and how many times out of the last 15 years this became profitable.
Interesting.
So in this particular type of spread, and every time I hover over that, it's gonna be, but let's take a look. Nope. This is kind of the last 15 years of results. And um, so last year, by doing this spread, there was a $480 profit. The year before, there was a $6,000 loss, a $5,000 profit. So on down, you can see that 13 out of the last 15 years. If you can you see this, Merlin?
Yep.
Okay, 13 out of the last 15 years, these doing this would have been profitable. Profitable to what degree? It's all over the board.
Sure.
Okay.
So for the podcasters out there, they can't see this. It's showing
Okay.
a spread between buying the March 26 soybean contract and selling the March 26 wheat contract. And
Correct.
it did it 15 times. There were 13 winners, 2 losses. And it's funny because it says the average loss was 4,000, but who cares if you'd only have 2 of them? The average winner was 3,393, but there's 13 of those. So overall, following this spread, extremely profitable.
Extremely profitable. However, it gets to the point where these things can have significant drawdowns.
Sure.
Much greater drawdowns in the process of getting to that profit than I'm certainly not willing to take. So these are the types of things that I do. And you keep these things on for a while. You don't have to babysit them. When you do spreads with futures, the margins that are required are much, much less. That's why they're very popular. And the most popular types of spreads are not these intermarket spreads, but they're called intra-market spreads. And so those are literally apples to apples. You buy 1 month of oil and short another month of oil at the exact same time. And the relationship between those two contracts, they're not going to go in opposite directions, but you make more money on one side of the spread than you lose on the other side of the spread. So it's the difference in price that you take advantage of it. And it's all pure statistical analysis. Now, in my class, and I don't even want to sound like I'm showing for a class at all, but I just want to explain how I deal with all of this. And I use strict risk management. I use core strategy to identify entry points that might be more efficient than just blindly doing this on the 1st of January and getting out of it on the 27th of February, which is the seasonal window. But there's a reason behind all of this, and spreading is basically you're long a contract of something and short a contract of either the same thing or related instrument, and taking advantage of these seasonal tendencies. There are reasons behind it. These aren't just shot in the dark. There are things as obscure as harvesting schedules or the amount of corn when hogs are being fed, how much they're used in certain months versus other months. It's fascinating stuff. I don't really get into that. And I keep track of not only my personal stuff in the class, but also what your results would be if you'd just done it blindly versus what your results would have been if you had done it on the dates of the seasonal window, but also applied risk management, like a $300 stop or a $600 stop. Then what would your results would be? So I've got spreadsheets on all of it, and it's quite fascinating, and it's been quite lucrative as well.
Do you have a select group? So, when you talk about spreads, it's almost infinite, right? Whether you're talking intra or intro spreads, I mean, there's so many different ways you could go with it. I always talk about this with Forex traders. Like, quite often, Forex traders have even though there's so many different currencies, they have a very small basket that they trade. Do you have a specific small group that you focus on, kind of like your bread and butter spread trades?
Well, that's a great question. And the fact of the matter is that some of the some of the months that are involved in the spreads are like two back months or not one of those months isn't even a front month. And so you can get some liquidity issues and things like, so what won't I touch? I won't touch heating oil. I won't touch gasoline. Um, I generally don't like to do dollar pairs as spreads, another
Interesting.
pound versus the yen or something like that, because of the interest rate climate can change so quickly with those things. But my bread and butter stuff tends to be cattle, hogs,
Hmm.
natural gas, oil, and any of the other agricultural grains like corn, wheat, and soybeans. So that's kind of where I stick my nose in most of the time.
If you've got to be just kind of just shaking your head at what's going on with natural gas right now. I mean, tell me that's just wild.
Well, if I went to and I could go to one of the spreads I have, and I don't know who can see what out
I can
there.
share your screen, sure.
Okay. So this is a corn spread. This is
Oh, look at this. Hold on. I
demand.
have to interrupt you real quick. Audience,
Okay.
pay attention. I just got excited. This is pornography for me. His charts are black and white. He's using black and white
Oh,
candles. I
oh
love it. This
God.
is what I do downstairs. I don't do it upstairs because all the people are like, I want red and green candles. That's what I see on my platform. I'm like, look at the black and white candles. Sorry, I couldn't
Well,
resist.
there. Um, so natural gas. So here's a natural gas spread that I just made entry on not that long ago, and it was initially to get in on the November 19th and out on February 27th. Well, November 19th, price was, you know, way over here somewhere. I wanted to wait till it, so you can see this is a spread chart. You can see
Yeah.
these two symbols up there of the two different months of natural gas. And you see this drop-based drop formation, and this is an area of demand that this whole thing took out. And so I've been waiting for quite a while for it to come back. And you can see how quickly it started to move simply because this cold snap that we're experiencing right now was widely forecast. So natural gas will start to move. If I had the um, the front month contract right now on it,
Wild.
you can see on the left side here, this is a daily chart. So look at the size of these last 4 days,
Yeah.
the range of price in natural gas, and it's all because of this cold snap. Now, this was well telegraphed in advance, and you can see that we had this big gap up, from last Friday to Sunday, and then all week it's been climbing higher. And so I could get burned on this, and I've got burned on this many times. But once the news is out and the weather is here, and then that's when things can collapse.
Yeah.
So I will have a stop loss on this to be sure, and a target down here someplace. But so that's how this stuff works, and all these watch lists over here are spreads. And some of these spread charts are kind of weird because they're two liquid months or they're back-to-back months or something like that. So I don't do them all. And then we have outrights, which are basically just going long or short a particular contract based on the seasonal time of year. So it's a fascinating topic and subject matter, and one that I've been doing for quite some time. And so the nice thing about it, again, is you don't have to stay in front of your computer for 6 hours a
Yeah.
day. Just let the stuff work or not, and then move on. And that natural gas spread, by the way, if you were the margin on each of those two contracts would probably be about $3,000 or $4,000 a piece for the initial margin. But because you do them simultaneously as spread with the spread broker, that margin falls down to about $1,000 total.
Yeah, much more
So,
affordable.
yeah. So
One day it will
very
pop
simple.
into your future your spread class.
Sure.
One day. Look,
Okay.
I don't want to take your time any longer. It's Friday. You probably have a happy hour to go to somewhere. Oh, not with your knee. You probably have a little wheelie cart to get there.
Yeah, I've got an ice pack waiting for
You
me
got the Lark
upstairs.
3000 cart. Let me get your forecast for the S&P for the end of the year. We closed December 20 at the end of this year. 68.45. Are you bullish this year? Or are you bearish? Where do you think we're going to end up?
Can I just give you percentages instead
Sure.
of a number?
I'm okay with that.
And you can figure out the number?
Oh, I can do that.
Okay. So again, I said kind of at the top of the show that this is a midterm election year. And because I'm so in tune to the seasonal stuff, the midterm, so the year of a midterm election, the markets averaged less than 1% gain.
Well, okay.
The year after a midterm election, so the 12 months after, the market has averaged over 16% of a gain. So leading into the midterms, so we're going to come out of April, and I don't know where we're going to be, but April kind of, this is a strong period for the market seasonally. Then we go into the doldrums, and then we're going to head towards the fall in November, September, October, notoriously bad. So I'm going to kind of say 1%.
Positive 1%.
Positive 1%.
Oh, I thought you were going to go negative on me. Okay, all right.
No, I'm not going to go negative on you.
All right, I will put the exact number in later, just so I can.
Okay.
I got to update all the spreadsheets here, and then you're probably not a big crypto guy, but we do Bitcoin as well. Do you want to throw a thought on there, Bitcoin?
Well, I can give you a seasonal statistic for Bitcoin in the midterm election years, and it might make you throw up.
Well, I'm off camera, so do it.
Well, the last 3 midterm election years for Bitcoin, negative 76%, negative 58%, negative 67%.
Because it happens every 4 years, and there's a 4-year cycle.
Okay. So I'm not gonna be quite as bearish on that, but I'm gonna say around 75,000.
75,000. Let me put Craig in there for that one.
Okay.
So there's somebody actually at 75,000. You want to do 75,000 and $1, just so you don't do the same number?
I'll go lower.
Oh, okay. Well,
I'll go. How about 65,000?
we don't have a 65,000.
All right, I'm in.
All right, I've got you in for. Let me put the name down there. Well, 65,000.
And I would want to make a disclaimer to anybody listening. Don't do what I say.
Hey, these are all just fun forecasts for the market. It's okay. It's all right.
Good.
Yeah, you're interesting. The seasonality. There's this very clear pattern that happens on Bitcoin every 4 years, and that's the question: is this time different due to the new regime? But time will tell.
Well,
Anyway.
I would. So here's my thoughts on that. So the president is a crypto guy, right?
Yep.
And so they're going to do everything they can to maybe keep it propped up. That's why I'm not going to go dire straits on it and say 75% lower. I'm just going to go. Where are we now? Around 90,000 for crypto.
Yep.
So, but that's 25% lower, or something like that. So
Yeah, your forecast
I'm going to moderate the.
Your forecast puts Bitcoin percentage-wise a decline of 26%.
Okay.
For the
there we go. All right.
All right.
I stand on record.
And I've got you in on 6,000, roughly 6,920 for the S&P. There you go.
Okay.
Book
All
it,
right,
Dano.
sounds good.
All right. Well, hey, man, thank you so much. I appreciate you taking time on a Friday. I know you probably have huge plans this weekend, a nice soccer tournament.
I've not left my house for 16 days, and I don't plan on leaving it.
You got to get out. Oh, that's true. Your doors are frozen shut. No wonder.
I don't know. I got water running in my faucet, so it's
just constantly on, right?
Yeah.
So that's just weird the way you guys have to do that.
Merlin, this has been a lot of fun. Thank you for having me.
My pleasure. Always good having you on. Don't get to see you enough, so I appreciate you taking the time. And hopefully I get to see you out here in SoCal. Or I'm going to be on the road here soon. I may be out there, teaching the crypto program here soon, so maybe I'll come by your neck of the woods.
That'd be awesome.
All right, well, take care, my friend. Have a fantastic weekend, and hope you mend up soon.
Okay, Merlin, you do the same.
Right,
Thanks for your well wishes. Appreciate it. All right, take care.
All right. Guys, that was Craig Weil giving us some insights into his 2026 market outlook. And of course, it's different for Craig because Craig doesn't care, right? Whatever the markets give him today, tomorrow, the next day is more what he's interested in. Some of the seasonality I find very interesting. And this is kind of why I like having diversity of traders on. He kind of threw a number out there, and the number he chose was based off of historical data and what historically has happened. Otherwise, I know Craig. Craig doesn't care. He doesn't care what happens at the end of the year because he'll be trading accordingly, whether that's going long or going short. And I respect that because when I made my forecast for where I think the market's going to be, I think the market's going to be down just a little bit. And I didn't say much. I think about 7% was the number I mentioned on the program. But even if we have a 50% up year, I'm still going to do okay because whatever the market gives me is what I'm going to adapt to. And right now, I made a comment earlier, which I probably raised some eyebrows out there. I'm still overall bullish on the market, but if you look at what's gone on with these defense stocks, if you look at NOC, right? NOC, here's Northrop Grumman. Look at the price appreciation of Northrop Grumman just over the past couple of months. We've gone from a low point here, which I probably can't click on. That was in December 1st, 24% rise since December 1st. You look at LMT, Lockheed Martin, similar picture where you have just massive gains. And that tells me that it just feels like they're planning for more defensive spending here. And that's 36% gain. Of course, they come out with earnings next week. We have Lockheed Martin, we've got Boeing, we've got Northrop Grumman, all these guys reporting earnings. What was the other one in there? RTX, I think, comes out next week with earnings too. They've all had pretty significant moves up. And, for me, it just feels like there's so much complacency. The markets just feel so right and everything's great and rosy. And when that happens, my spidey senses start to tingle. Of course, Oliver says your spidey senses are always tingling, but that's okay. I've been long. I still am long. Today, I did sell puts again on Tesla. So let's just revisit those trades real quick before we wrap up. TSLA. So I had the 432.50 puts on Tesla that expired worthless today. That was great. Today I sold more at the 432.50, and that was actually a pretty hefty premium I received today for that one. I'll bring it up here real quick so I can give you the exact number. I sold, let's go to my orders. So the orders filled. I sold the 432.50 is expiring next Friday and collected $7.65. So that's almost 2% for the week. Yes, Tesla has earnings next week. That's exactly why that premium is so dang high. And the question is, do we get a big drop down? Tesla's going to report earnings on Thursday. So we'll see. We'll see if I decide to close that position by next week or not. You had the 410 puts expiring today. Nice, big up. I had the 432s. I probably got a little bit more premium. You're paying more defensive, which is okay. Just knowing next week will be a volatile one. But Amazon, that expired worthless for me today. And as you guys were to discuss, or I was discussing today, the SPY. So I have that lower line there. The only reason I chose the 666, guys, there was no rhyme or reason to the 666 purchase of puts on the SPY other than it's a demonic number. I couldn't resist. I saw it. I'm like, okay, I'm going the 666s on this bad boy. And I don't plan on holding it to expiration. I think the next couple weeks you're going to see some bad announcements. You can see normally when I'm buying options, I'm going to buy 90 days or more. In this case, I went out to February 27th, so I'm going pretty short term on this one. I think it'll just be a short term trade for me. But anyway, there you go. We shall see how that all pans out. All right, what are we at now? Great, it's already an hour show. Son of a biscuit. Let's see. I don't even have my economic calendar up here yet, so let me bring that up. I thought I had it all set up and ready to go. Again, if you guys like Craig Weil, you can find out more information about his spread trading class at tradingacademy.com, and he's got them going on all the time. Here is your economic calendar for Monday. For the U.S., you've got durable goods orders. That's pretty much it. There's not a lot going on internationally. There's a couple statements being made, but really the durable goods orders for the U.S. is it. And there's a couple of earnings announcements on Monday as well. Let me bring that back over here and bring up your earnings so I can wrap up and go enjoy a little bit of sunshine that's popping out here in SoCal right now. It's been kind of dreary, cold, and rainy the last day. we'll see if I can go maybe play some pickleball here in a minute. All right, scrolling down, what do we have for Monday? There were a couple names I remember. Nucor, Ryanair, Brown & Brown, Steel Dynamics. That's pretty much it. And that, my friends, is your earnings calendar for the day. All right, refill the glass. First show, it's already empty. We filled that one out. So that's going to do it for me, everybody. Again, I'll do a show Monday. I'm going to do a show, no show on Tuesday, because I will be doing the presentation for the Money Show. That's going to be an online presentation, which I think I've already shared that with you. That'll be about crypto scams, which there are way too many scams out there. It's a short one, but unfortunately it runs in line with the show here today. And then on Wednesday, we're going to have Bill Addis, and I'm also going to try to get a couple other guests on next week. Unfortunately, Larry can't make it, but I might have another couple guests on the program for you, which should make next week rather fun. I want to get them on before we get to February. Don't do a head start for the forecast for the year. Anyway, hope you guys enjoyed that with Craig Weil. Always fun, especially to hear him talk about the real story behind how a trader was feeling on Black Friday or Black Monday. We hear so many different stories from the media and things. He was there, lived it, walked through it, and survived it in a smart way. Went out and bought CDs. Pretty impressive. Anyway, guys, have a fantastic weekend. If it's something you want me to discuss on Monday's show, email me at tradermerlin@gmail.com. That's it. Have a fantastic weekend. Cheers, everybody. I will see you on Monday.